bank reconciliation. Now, why is this so important to a business? Because businesses have bank accounts. They really do. And it's just like customers, regular Joe Blows like myself have bank accounts. Well, the businesses do too. Now, not everybody can get access to those bank accounts, but they do have them. Now, let's say you're running a clothing business, and you buy clothes on a wholesale price, bring them into your store, and then sell those clothes for a retail price. Now, you have to keep your retail prices competitive, or you're not going to be in business very long. But you do this, and then what happens is the customers come in. They look at your clothes, they like the clothes, and so they buy the clothes from you. Okay? Now, there's 3 ways they can pay for them. Cash. See, I got about $7 here. They can also pay by a credit card. What? You honestly thought I'd show you my real-life credit card? Get real. But credit cards work just like this because they have a barcode across the back. So you got those. And then you have checks. Now, you got to keep in mind that credit cards have been around at least since the 1960s. Okay? But the way credit cards worked back in the 1960s is a little different than what they work like today. They used to have a sliding machine. Okay? And what you do is you put the credit card on this special plate, and then you put a receipt on the plate, and you slide it across. And then you give one portion of the receipt to the customer, and then you save the rest of the receipt, and you turn that into the bank. Alright, and that's how the whole thing got processed. But there is another way people can pay, and they still do this. I'm not sure why, but they do. Of course, nowadays, when you have people that are doing these special credit card fees and debit card fees, I can kind of see why some people still do this. But on a regular basis, it'd be just far easier and a little more convenient to use your credit and debit cards than to just stand there and write a check. But people do this. People write checks. Now, I'm going to show you how things used to work. Now, back in the 1970s and the 80s, this is how things used to work. Even in the 1990s, this is still how they worked. Okay? Now, in the 21st century, things work a little bit differently. But before the year 2000, this is how it worked. Somebody came in to you. This is your customer. They came into your clothing business. They wrote you a check. At the end of the day, you'd come over here to the bank and you deposit that check. Then this bank, your bank, because you're the owner of the clothing business, okay, this bank would then have to go to this bank and demand the money from them that was on the check. Okay? And then, of course, that money will be removed from the bank account of this person, which was your customer. Now, this process could take several days. Not always did it do that, but sometimes it did. So that became a problem. Now, let's say Mr. Customer comes in and he writes you a check, only he doesn't have any funds in his bank account to cover that check. That's called a rubber check. So what happens is he writes you a check, you take it to your bank, the bank then goes to this bank and says, hey, I want the money. The bank says, well, we don't have any. So now the bank comes back to you and says, well, you're just out. Now you say, well, how do things run in the 21st century? Well, what happens is they have a special check reader now, and it's directly connected to all the banks. And what happens is that a special signal is sent from your clothing store to this bank, and from this bank to this bank. It is done virtually instantaneously. And then this bank says, okay, yes, he does have the funds. And they send a signal back here saying, yes, he does, or no, he doesn't. Then this bank sends a signal back to your bank and sends a signal back to you and says, go ahead and take the check. Okay? And because it's now 21st century technology, within 5 minutes, You take the check, signal sent here, the signal sent there, and within 5 minutes the money is from here, back to you. Okay? And realistically, the money when it comes from here goes back to here, and then later on you can just claim it whenever you want to. But that's how it's done these days. There is no time lag that like there used to be. Somebody writes you a check now, and you got one of these special check readers, you'll have your money in less than 5 minutes. Now the only problem is that small businesses, ones that operate at people's houses, usually don't have those special bank readers. They don't have a special check reader to read all this stuff. They can still get stung. But if you've really got a good check reader, you'll have your money in 5 minutes. Or you'll know whether the money's even in there. If it ain't there, you just don't take the check. Now, I will tell you that that is not exactly a perfect system, because when communications line goes down, when the communication line goes down, whether it be due to storms or whatever, say your equipment breaks, now you still got a problem. Okay, because when the communication lines go down, you have to go back to the old way of doing things. You'll take the check, then the check is processed to this bank, and you could just still be out. So, like I said, the new system is a little better than the old system, but it relies on a lot of communication, and if the communication lines go down, you're still screwed. Or if you're a small enough business where you don't have the special check reader to send a signal to the customer's bank right off the bat, you're still screwed. Alright, so all this stuff has to be reconciled. In the old days, when you did this kind of procedure, it could be several days before the whole transaction was done by check. Because remember, you had to take it from your business to your bank, and then your bank had to confer with this bank, and then the money was transferred from this bank to that bank, and that's how you got your money. Like I said, that could take several days in the old days. Of course, in the 21st century, it takes about 5 minutes. So you have to consider there was a lot of difference between what happened back before the 21st century and what has happened since the 21st century. Alright. So, you have to account for deposits, outstanding checks. Remember, you can still have an outstanding check, because if you have to still go through the old-fashioned way due to communication lines going down, it can still be several days before both banks recognize that the check has gone through, and so on and so forth. So therefore, you got a problem. Bank errors. You turn in the checks. Make sure when you turn in the checks, sometimes you don't have to turn them in anymore. Some of these check readers will print void on the check, and then you get the check back to the customer. Alright? But some businesses still have to retain the checks. If you're one of those businesses that has to retain the checks, the first thing I'd do is I'd make a photocopy. You just scan a copy of the check, and then when you turn it into the bank, make sure the bank gives you a receipt saying that they indeed deposited the check. Because what will happen is once in a while their computers go screwy, and then they say, well, you didn't really bring us a check. Yes, you did. And if you can prove that you did bring them a check despite the fact that they are saying you did not, then they've got a problem. And they have to fix it. Alright, then you got your bank service charges. There are all kinds of service charges for bank accounts. You have no idea. You can go ahead and check that out for yourself. You can even leave a comment down below of all the service charges you've had to deal with over the past few years. Now, I've already talked about rubber checks. Rubber checks basically means that the customer really didn't have the funds he said he did in the bank account, in his bank account. He was supposed to have X and Y dollars in his bank account, and he didn't, and so you're just stuck holding the tab. Check printing charges. What does that mean? Okay, when you become a business, what you'll do is you'll ask your bank, you'll work with them, you say, look, I want my logo to be on the checks that you issue to me. Alright, because I'm going to have to use these checks to pay bills with. Remember, companies actually issue checks as well. They really do. Especially if they're having to refund money to a customer, they may do that on a check, rebate check, you name it. And so if they have to refund money, they're going to have to write out a check, and they have to put the company logo on it. And of course, that costs. The bank has to go out and get special printing because you want the special logo on your checks. So there's your cost there. Most bank accounts today actually earn some kind of an interest. I happen to have a bank account that actually earns interest. Okay. Yes, my checking account actually earns interest. So what happens is that you have to show on your records, on your accounting records, that you actually earn money, because that's taxable income. And then we have something called notes receivable. Now this harkens to an older day in stores where stores would issue out store credit, their own store credit. They didn't rely on a credit card or a debit card. They issued their own credit. And so what they would do is they'd make out this little form, and the customer would then sign the form saying, hey, I promise to pay the company X and Y dollars on such and such a day. I also plan to pay interest on this as well. And so the company would record that, and that's fine. Now, when it comes to notes receivable, the company could hire a staff to go out and collect from these people that don't automatically come in and pay for their notes. Okay. Here you are as a company, a guy's bought a bunch of clothes, he fills out a special note that says, hey, I'm going to pay this back on certain day, I'm going to pay this much amount to you. Now, if the guy doesn't come back into the store and make all that good, then the company